Hello all and welcome back. I'm pretty sure all of you have heard of Cathie Woods. Pretty positive about that. She has created quite a few ETF funds where she's actually investing in lots of different well-known companies, and she has been doing pretty great in the previous years, but has slumped a little bit in the past like 6 months or so, where her ETFs have been underperforming. And you would kind of expect that. I mean, you can't really expect everything to go up forever. But I wanted to make a video to discuss the ARK ETF Trust Fund from ARK Innovation, basically. And this is basically the fund that Cathie Woods has created, and I guess her institute, her company. And it's a fund that's actually weighted towards healthcare information technology for the most part. But I wanted to examine it in detail and take a look at the core holdings and whether it could potentially be a nice fund for us to invest in, and whether she can actually turn things around. Because as I mentioned earlier, the fund has been going down in price and value. And I think it's down like, yeah, as you can see here, it's down like almost 22% in the last year, which is quite bad when you consider how well the S&P 500 has been doing in that year. And we will examine things in detail a little bit here. And I'm using a new platform here that I basically invested in order to be able to create better videos and have more charts, better charts, and more content, because people seem to be subscribing in the channel, enjoying the content, and I kind of wanted to give you more, and basically make it so that your time here is worth it for you to to watch the videos. And the first thing that I wanted to point out here is the historical price change towards the holdings weight of the ETF. And you can basically see here in a very nice chart the relative weight of each stock when compared to the overall ETF. So basically you will see here that Tesla has a weight of 7.24%, and it's actually plotted over here. And you can see it in comparison with the price change. So how well Tesla has been doing over the last 12 months, basically. That's what is depicted here. And you will see, if you take a look at the crosshair here, Tesla has been gaining 42%, basically. Or you can see it even here, which is like an ETF's holding table, which has a very nice picture of how well its ticker has been performing. And so you will see that some of the return on some of the stocks has been horrendous. Like Zoom, for instance, here has been doing really bad. And a lot of those have been doing bad. And NTLA seems to be doing the best, as you'll see here as well, with a core gain of like 126% almost, which is pretty great. But a lot of these have been below zero, basically, as you see here, which is here's about the zero line. And everything over here has been underperforming, basically. And even stocks like Twitter or Zoom, you will see it below here. But it's a nice first look at what holdings this ETF has, basically. Now, over here, I wanted to give you a quick glance of what this ETF is about and what it has been doing. And there are a couple of very important things over here to take a look at. And obviously, by far the most important thing is the total return, which on the yearly it has been losing money. It has not been doing pretty well. But as you can see here, in the previous year, like starting from 2019, the ETF has grown and has grown a lot. And then it slumped a little bit over here, and then it has gone down. I guess with the market, you have seen a little bit of correction, especially on healthcare and tech. It definitely has corrected in the past few weeks. So you would expect that. And however, 22% is pretty steep. And the other important and interesting thing to see here is the dividend yield that you are getting from this ETF, which is nice to have because it's an extra cushion. It gives you a little bit of money, so 2.10% of your holdings basically is what you're going to be getting back as dividends each year. And the other very, very important thing is the management fees, the total expenses that you will have if you actually purchase this ETF. And again, this is based on your holdings. So if you hold $10,000, you're going to be paying the trust, the ETF trust, 0.75% of this amount that you're holding. And this ETF holds 45 holdings, has 45 holdings, which is fairly low. It's not too many. So you kind of need to know that it's a little bit limited in diversification. So it's not super diversified. And this is what I wanted to show you over here. And basically last trading day, actually the ETF gained quite a bit over here. Seems maybe that the market condition is reverting a little bit and things are becoming a little bit better as we're approaching 2022. We'll see. But yeah, let's move on towards discussing a little bit about the overall gain that this ETF has actually made over the past few years. Now over here, it's actually very interesting to examine past performance of ARK, the ARKK fund over here. And as you see, back in I'm actually checking the five-year period on the monthly. So it's basically everything you see here is on a month by month basis, and it goes back to 2017. So basically 5 years before. And I think this is a nice metric, I suppose, 5 years back. And you will see here that if you actually bought this ETF in 2016 or 17 basically over here, January, you would have gained 383%, which is absolutely insane. This is amazing performance, actually. Yeah, you would have lost a little bit over here because it was almost 600% over here, which is unfathomable. I mean, it's insane to be that high in like 4 years with an ETF. Insane gains over here. But yeah, if you bought over here, then you were in for a little bit of a downturn over here. And it's important to also add another security here, and I want to add SPY, which is the S&P 500 basically, is the core index of the market. This is what everybody uses to evaluate performance of ETFs and stocks and pretty much every trading instrument. And you will see here that the ARKK fund has been massively outperforming SPY even after this downturn, which is insane, isn't it? I mean, if you have bought that some time ago, you would have made a lot of money and you would have massively beaten the market. So what Cathie Woods has done here and her company, obviously, is pretty impressive. I mean, they have been really outgrowing the market pretty much every year since 2017. Now, that doesn't mean that she will keep beating the market forever. Bear that in mind. Because as more time passes and when we have data for like 20 years, the same ETF, it will likely eventually come towards a balanced position, it will balance itself out if we're talking 30 years from now or so, or maybe even SPY will actually be higher then. But you can see here that the selections of Cathie Woods have been pretty stellar in the past 5 years, and that's what we're examining here and checking whether it makes sense to actually add this to our portfolio. And I wanted to add another stock here, Apple. So I wanted to check Apple as well. So if you have bought Apple, you would have also made a killing. If you have invested in Apple in 2017, you would have also made a killing with almost 500% gains, which kind of shows you how far the tech industry has come. It looks like there has been a massive boom in technology, and it's important to see how much you would have gained over the years if you invest in those. And let's just check Pfizer as well, which has been doing pretty well lately, obviously with money. And still, you will see that even if you have invested in Pfizer over the years, you would have made less than the S&P. So that kind of shows you how big tech companies are and how good was the Cathie Woods' idea to invest in tech and basically massively growing companies that are that are mostly you will mostly find them in industries like tech for sure. So that makes a lot of sense, right? So yeah, I wanted to kind of show you this ETF ARKK in comparison to the other ones, so that you see that even though it's been going down, it has been performing very nicely over the years. If you are interested in the technical aspects of trading ARK, you can see here that the stock price, the ETF price, is actually right now below the 200 moving average. So this is where it would meet that value over here, that line. And this kind of indicates that potentially you could see an upside towards that path over here. And the other technical aspect that you can, basically index that you can take a look at, indicator, is the RSI, which currently is sitting at 41, with 30 being oversold and 70 being overbought. So it left the oversold territory, but it's closer to that still. So it kind of shows a potential purchasing. Potential more purchasing actually happening. People are gonna be buying more probably. I mean, these are all indicators, technical indicators, so could happen or could not happen, but they are more interesting in terms of trading. But I just wanted to mention those just so that you can potentially have an idea of whether it's worthwhile to trade this ETF right now. And it may actually be worthwhile to trade it on the long side. That's what I wanted to convey here. And you will see also here the massive amount, the massive volume actually that has come in for that stock since 2020 really about. And then over here, 2021 February, I think this is when it started to go down. Yeah, you can see here was a little bit of selling because you're seeing the red bars over here. But yeah, you'll see that this is becoming more and more popular, and yeah, it's definitely an ETF worth talking about. So I do think that Cathie will be able to turn this around really, and she may not even have to turn anything around really. So, I mean, the ETF has been performing pretty nicely, so you will see some dips here and then. That will happen. But I think that this will start, to revert basically. It may go down for a little bit more, depends on the market conditions. But I think eventually it will creep up and even surpass this point over here pretty soon. I mean, the next few months, I would believe, to tell you the truth. I'm not seeing the market. I don't see the market really stalling from here and going down, to tell you the truth. But we will see, I guess. But I do believe that there is a lot of potential with ARK, and it is a fund that I would invest in. If I didn't like, if I did like the fee that they have, and I'm not a big fan of these high fees. I mean, it's a pretty high fee, it's almost 1%, and I'm really not a big fan of that. I mean, I could pretty much mimic the ETF myself and buy the same amount of stocks. It's like 45 stocks. I could even pretty easily mimic that myself and basically create an ETF like that on my portfolio manually if I wanted to, and save me that extra almost 1%, 0.75. Why not? And yeah, that's what I wanted to discuss in this video, and hopefully you enjoyed that. And I wish that you like this new interface that I'm using, this new software. I think it's pretty cool. Let me know, do you like that or not? But if you did enjoy that, and if you like watching these videos and you have something to learn here, you may want to subscribe and also like the video, because it took a little bit of time to make really. These videos do take a lot of research and a lot of time, so any likes that you add there are a pleasure and always welcome. So thank you for watching, and if you did enjoy this video, make sure to watch this one where I created pretty much a discussion video about the top 10 stocks that are worthwhile taking a look at and potentially buying for 2022. And I'll see you soon in the next video, guys. Bye bye.